Hello, everybody, and thank you so much for joining us today. Today's presentation is going to give you an overview of the new CARES Act. That's the Coronavirus Aid, Relief, and Economic Security Act. And we're going to talk about planning strategies and opportunities. With me today is Sam Deckman, one of our wealth advisors at Deckman Wealth Management. And my name is Jordan Deckman. I'm the founder and CEO of Deckman Wealth Management. This next slide simply is discussing our disclosures. And now that the formalities are out of the way, a couple of housekeeping items. We've had a few questions wondering whether or not we're still open, and the answer is absolutely yes. We are all coming to work and working at the office each and every day. We're working overtime, very hard on your behalf. So feel free to reach out to us by phone or by email, and we're more than happy to help. We provided this video as a resource not only for you, but feel free to share this with any family or friends. And lastly, we're going to have a little goodie bag where we're going to provide additional insights and other educational information. And the only favor that we ask of you is that you complete a report card at the end of the presentation, and we're more than happy to email that right away. So let's discuss today's agenda. First off, we're going to talk about all the high points related to the CARES Act. We're going to give you specifics as it relates to the stimulus check, the required minimum distributions, which are waived for 2020, mortgage forbearance, healthcare related rules, small business owner relief, student loan debt relief, tax filing extension, Social Security scam and planning opportunities.
Great. Well, thank you, Jordan. I appreciate that. The first area we're going to cover now is the stimulus checks. Now, most folks are fortunately going to be able to receive one of these. So what it is it's going to be a one-time payment of up to $1,200 for individuals and $2,400 for married couples. And additionally, there will be an extra $500 per child under the age of 17. However, there are some phase outs as to who gets the check and who gets the full amount based on your income. So if you can see here on the bullet points below, you can see where the phase out limits start to happen. So if you are a married couple and you filed jointly and you made less or had an AGI of less than $150,000, then you will receive the full $2,400. If you are a single filer or another filer, if you made below $75,000, then you will get the full benefit. And what you start to see is that these amounts that you receive start to phase out at every $5 per $100 of additional income. So for a single filer, you're completely phased out. With single filer, no children, completely phased out at about $99,000. If you're a married couple filing jointly with no children, then you phase out at $198,000. Now, how are they going to determine how much you made? They're going to base it on the last tax return that you filed. So if the last tax return that you filed thus far is from 2018, that is what they're going to base the amount off of. But if you already happen to file your 2019 tax return, that is the amount that they're going to take into account. Now, for those that made above these limits in 2019, but will be impacted by the coronavirus and will be below these thresholds, you will still get this money, but it will be a credit on your 2020 tax return. So don't worry about that. It will come, but it will be sometime in the future. So when should you actually expect to receive these checks? The way it was written is that they are supposed to be paid as soon as possible. But looking at other stimulus packages, it normally takes a few weeks. So on the optimistic side, hopefully checks start to get sent out at some point, likely later in April, but it might not potentially happen until May. So where are you going to receive it? If you are already collecting Social Security, you will get this stimulus check wherever you receive your Social Security payment. So if you are having your Social Security check direct deposited into your bank account, that is exactly where this will go. Or if you have your Social Security check sent to your home address, that is where it will be sent. For those that are not current recipients of Social Security, what they will do is they will look at the bank account information if you did direct deposit for a refund on your 2018 or 2019 returns. So that is the first place that they will look, if you already have a direct deposit set up. If you do not, then they will send the check to the last known address on file. So it's very important that if you have moved within the last year and have not notified the IRS, absolutely need to do that. And the way that you can notify the IRS is by filling out Form 8822. So fill out that form and send it back to the IRS, and then they will make sure that they send it to the correct place.
Okay, thank you, Sam. So moving right along, required minimum distributions, also known as RMDs, are waived for 2020. As part of the new CARES Act, you're not required to take an RMD on your traditional IRA or inherited IRA or an inherited Roth IRA. So that means you can delay your withdrawal this calendar year, 2020, and restart that again in 2021. This is a tremendous planning opportunity. We strongly encourage you to take a very close look at this. We'd ask that you give us a call at our office so we can discuss this with you in more detail. There are ways that we can be more tax efficient, and there's a lot of planning options related to that. Next, we have mortgage forbearance. This is a really nice benefit for homeowners that have a federally backed mortgage. You are eligible for mortgage forbearance up to 180 days. Potentially, you can get an extension for another 180 days above and beyond that. However, what we would recommend is that you call your mortgage provider to see if you qualify. If you do qualify, this can help defer some of those monies. It doesn't affect your credit, and in most cases, they will not only defer the payment, but they'll defer the interest as well.
And there were also some changes in the CARES Act to healthcare related rules. The first thing is that they expanded the definition for what it counts as a medical expense. So that specifically relates to those HSAs, FSAs, and Archer MSAs. What you're also able to do is now eligible medical expenses will now include over-the-counter medication. So that is very big if you are currently using some over-the-counter medications. Some other notable changes is Medicare beneficiaries can receive a no-cost vaccine once it's available. So there are trials that are being put in place right now, and whenever it is that a vaccine becomes publicly available, Medicare beneficiaries will receive that at no cost. So Part D recipients on Medicare right now can also request up to a 90-day supply of medication. That way you can get everything you need and hopefully obey the stay-at-home orders and keep yourself safe. And lastly, the telehealth services are temporarily covered by HSA-eligible, high-deductible health plans. So you're seeing telehealth more prominently now with folks not as active and about. So it's very nice that they're able to be covered by HSA plans.
So with respect to the small business owner provisions, the first item here is that there's deferral of payroll taxes. So employers will be permitted to defer your 2020 payroll taxes. Now, 50% will be due on December 31st of 2021, and 50%, the remaining 50% will be due on 12/31 of 2022. This is a great way for business owners to kind of push that off into the future. Now, the next item here are small business loans. This is one of the most extensive provisions within this CARES Act, and it does provide for business owners to receive stimulus benefit, in many cases in the form of a 100% forgivable loan, provided you meet certain criteria. There are lots of programs out there. You can give us a call and we can walk through some of the different programs as far as planning opportunities. And then number 3 is the pandemic unemployment insurance. Even if you're a sole proprietor, or maybe you have a couple of employees, and because of this coronavirus, you've had to lay off some people, there is a way to get unemployment insurance for your folks and for yourself, even if you're self-employed.
Student borrowers are also going to get some relief from the CARES Act. So federal student loan payments are now deferred through the end of September this year. So what that means is no payments are required for the next 6 months. And during this time period, no interest will accrue, and this time will still count towards the loan forgiveness program. So some of these programs are a little bit different on the amount of time that you have to continue paying until the loan is fully forgiven. So this time period between now through the end of September will still count towards that loan forgiveness program. And finally, it will not negatively impact your credit, which is huge. Thankfully, what they've done is they've already suspended required payments, but voluntary payments are not. So you must be proactive to stop the voluntary payments if desired. And the involuntary debt collections on federal student loans are also suspended. So if you have student loans or you know someone who does, definitely make them aware that they need to be proactive to stop voluntary payments for this time period. And another provision that wasn't a part of the CARES Act, but actually passed a few weeks earlier, is that there's a new tax filing deadline. So now you do not need to file and pay your 2019 taxes until July 15th. This also applies to the first quarterly estimated payment for 2020. So let me just repeat that. You do not have to file or pay your 2019 taxes until July 15th of 2020. And what they also did is they also allowed people to still contribute to their IRAs or Roth IRAs until July 15th, 2020, and have it still count towards 2019. So please give our office a call if there's something you're interested or want to learn more about. But being able to still contribute to a Roth IRA or a traditional IRA and have it count towards 2019 can be a really great planning strategy.
Okay, Social Security scam. Unfortunately, this coronavirus has brought out the best in people and also the worst in people. There's a big scam going on related to Social Security. Please know Number one, Social Security will never threaten you with benefit suspension. Absolutely not. Number two, promise a benefit increase or other assistance in exchange for a payment. Number three, demand secrecy from you in handling a Social Security related problem. And lastly, send official letters of reports containing personally identifiable information via email. Federal government and Social Security specifically will contact you by regular mail only. They will not call you by phone, and they will not send you emails. There are other related scams that are out there, too many to mention. One in particular, which I saw personally, was related to Costco, where there's some sort of stimulus benefit in relation to signing up for the email, and it's malware, it's virus-laden emails. Please be careful. Many scams that are out there. So as we wrap up our discussion today, there's 7 areas that we just want to call to your attention for planning opportunities. First and foremost, we strongly encourage you to stop your required minimum distributions for 2020. Please call us, let us know. Let's talk about the options and what planning strategies would be in your best interest. Secondly, we would encourage you to call your mortgage provider to see if there is any sort of mortgage forbearance and you can delay payments to your benefit. Number 3, it's not too late to contribute to your IRA or your Roth IRA. As mentioned, you are extended to contribute all the way to July 15th. Number 4, as the market has seen its challenges, this is a great opportunity to determine whether or not a Roth IRA conversion might be best for you. We can again look at the numbers, discuss strategies, and see what direction would work out. Number 5, we've gotten a number of calls for clients that have money on the sidelines. They have money in the bank, maybe in a money market, a CD, a checking account, and it's just sitting there doing little to nothing. At Deckman Wealth Management, we have put together a strategy that we refer to as a cash plus strategy. It's a way for you to do better than other safe money instruments. And again, this is a way to really take advantage of the market inefficiencies and moving forward in that area. Number 6, if you know someone that has student loan payments, please let them know about this, where they can defer those student loan payments. And again, if there's questions, we can help with that as well. Lastly, we are here for you. Please call us. Our phone number is listed there, 303-741-9772. We are all here at the office every single day working hard on your behalf, and we're more than happy to help. So as mentioned in the beginning, we have a goodie bag. And in return for the goodie bag, we'd ask a very simple favor, is that you complete the report card. Included in the goodie bag are the presentation slides, also Deckman Wealth Management's insights on the current state of the market and the economy, and 7 Principles of Long-Term Investing research report. So to receive the goodie bag, if you were to complete the report card, and we will be sending you a link in regards to how to log into that. And then once you complete that, an email will be sent immediately following. So on behalf of all of us here at Deckman Wealth Management, I want to thank you for the trust and confidence that you have placed in us. This is a very difficult, unprecedented time for all of us. We're all in this together, and we'll get through this together. Please call us, email us, go to our website. Any way we can help, please let us know that we're here for you. Thank you all, and have a great day.